The Maryland Throughout 2021, the Maryland Insurance Administration has been holding listening sessions to help us more fully understand the experiences of specific communities relating to their insurance needs. These listening sessions assist us in fulfilling our statutory mission to serve Marylanders, both in our enforcement of Maryland's insurance laws and in our development of tools, guides, and programs for consumers. What we learn from these sessions often inform both our conversations with policymakers in the General Assembly, but also enable us to decide where we need to develop more programs and where we need to do further investigation. Today's session is targeted at insurance consideration for rural Marylanders, and we thank you for joining us for this important session. In our announcement, we outlined several topics of potential concern, including network adequacy of health insurers, experiences with telehealth, the availability of purchase options for individual health insurance plans, coverage options for agricultural and farming operations, homeowners insurance costs related to property age and geographic distance to water supplies, storm damage and storm chasers, and of course, flood and flood insurance. This is by no means an exclusive list of the insurance issues that we can discuss today. My team and I are here to listen, to ask questions, and to learn. And to that end, and as we get started, let me first introduce the Maryland Insurance Administration staff that are here with us today. So first, let me introduce Corey Boone, our Chief of Staff.
Good afternoon.
Joy Hatchett, the Associate Commissioner for Consumer Education and Advocacy.
Nice to be here this afternoon.
David Cooney, the Associate Commissioner for Life and Health.
Good afternoon.
Robert Barron, the Associate Commissioner for Property and Casualty.
Good afternoon, everyone.
Eric Willihan, who's an Assistant Chief Investigator with our Insurance Fraud and Producer Enforcement Division.
Hello, good afternoon.
And you've met Craig I, who was our Director of Communications.
Hello and welcome.
Now, just a small housekeeping matter. As you've heard, the listening session is being recorded today, and it is being live streamed on Facebook. We will call on registered speakers first, but if you did not register, we still want to hear from you if you want to talk to us. So as time and technology allow, let us know that you want to be heard. You can do that by using the chat feature. Just indicate that you'd like to speak, and Craig will be able to pull you over so that we can hear from you. And of course, to ensure excellent sound quality throughout the session, we ask that you please stay on mute unless you're speaking. So with that, we can get started. Our first speaker today, I'm very happy to announce, is Megan D'Arcy, who is the Program Director for Rural Maryland, the Rural Maryland Council. So Ms. D'Arcy, welcome, and we're happy to hear from you.
Oh, thank you so much for having the Rural Maryland Council present today. The Rural Maryland Council believes that there are several insurance issues facing the rural areas of Maryland. These issues include healthcare as it relates to telehealth and provider availability and transportation, property insurance related to shoreline and stormwater inundation, and insurance relating to agriculture and agrotourism. Access to healthcare is limited in rural areas versus suburban, urban counterparts due to the lack of providers and transportation challenges. While pre-adoption rates for telehealth were merely 10% pre-pandemic, there's been an explosion in telehealth adoption rates that have benefited rural Marylanders' access to healthcare. The Rural Maryland Council believes that the telehealth audio-only expansions passed in the Preserve Telehealth Access Act of 2021, that was House Bill 123, Senate Bill 3, during the last session were significant and should stay in place. While telehealth is a more accessible option to many, those in certain parts of the state do not either own the proper equipment for a telehealth visit or live in areas that lack proper broadband access to participate in a telehealth visit. For example, 20% of rural Marylanders do not have access to internet, and 36% only have access to low-speed internet. By adding audio-only and remote patient monitoring services to the services covered under telehealth, it reaches those who would have been cut off from these services because of a lack of digital literacy or technology. Therefore, the ability to access healthcare by audio only is hugely important. Additionally, streamlining the billing process was a benefit of the Preserve Telehealth Access Act of 2021 that required health insurance companies to reimburse healthcare providers who were providing telehealth services to patients that otherwise would have only been covered in person. Again, providing access to telehealth from anywhere, rural, suburban, urban, is vital. While the pandemic will eventually end, many will still be left without the ability to properly access in-person healthcare needs. Both the audio only and the changes in the billing process are to sunset in 2023. The council would greatly appreciate the support of the Maryland Insurance Administration to keep these permanent. Provider shortages. Rural Maryland is currently experiencing a shortage of healthcare providers, particularly in specialty areas such as mental health and dental. According to the Health Resources and Services Administration, more than 60% of Americans in rural areas live in designated mental health provider shortage areas. In addition to having a lack of healthcare providers, rural Marylanders tend to be both older and in poorer health than their suburban counterparts. Transportation. Lack of access to public transportation can limit rural Marylanders to get to their medical appointments, especially if telehealth is not available and or in-person visit is required. Organizations like the Tri-County Council for Southern Maryland's Wheels to Wellness program have developed systems to help with non-emergency medical appointments. My hope is that John Hartline, who's the executive director, will be joining us shortly so he can talk about the Wheels to Wellness program. Stormwater management. We have a significant amount of shoreline around the Chesapeake Bay and its tributaries, as well as along the Atlantic coast, and the people and communities in those areas face increased frequency of dealing with elevated water tables and extreme weather events. Whether it's inland creeks or rivers that overflow or coastline, we have to acknowledge these changing conditions and prepare for the future. In relation to insurance, we have found that more people are being impacted by stormwater issues and less people qualify for insurance coverage, or they are deciding not to sign up for insurance at all because of the increasing costs. Lastly, with agriculture. In relation to agriculture, farmers are increasingly building an agritourism component into their business, which creates additional liability for these farmers. These operations must have insurance to cover the activities that are taking place on their property. This includes activities ranging from hunting and fishing, ATV use, petting zoos, hay rides, bed and breakfast, and the sale of food. This is to assure that they are covered if someone is injured on their property or claims they will become ill because of the food from the farm. As more farmers are switching over to agritourism, many do not realize that their regular insurance policy will not cover their agritourism activities. According to the Census of Agriculture, agritourism has more than tripled between 2002 and 2017, and we believe this trend will only continue. In closing, I have highlighted just a few of the challenges that people in rural Maryland face. I would like to turn it over to John Hartline, although I don't know if he's with us right now, but he may be joining us in a little while, and he can highlight the Wheels to Wellness program, which is provides transportation for people who otherwise cannot have a way to get to their non-emergency medical visits.
Yes, I don't believe John is on the line.
All right, thank you, Greg.
Well, we'll come back. I did have a couple of questions for you. So with regard to the agritourism and the expansion of that in Maryland that you're seeing, is your sense that this is more a function of education for the landowners about what their changing insurance needs are, or are people experiencing difficulty in getting the insurance once they know they need it?
I think it might be a little bit of both. I think the education piece is probably a key component of what is needed when they want to include a agritourism component to their farm operation.
So one of the things that Craig, I, and Joy Hatchett are working on is we're kind of come on tour into the rural areas and talk to chambers of commerce, in parts of the state that we don't get to quite as often. And we will definitely include this in our talking points, and also put out some consumer alerts and begin to think about the ways in which we can help folks be better educated about the kinds of insurance that they might need as they have different uses for their property. So thank you for bringing this to our attention. With regard to the stormwater management and elevated water tables, more extreme events, do you have any specific examples of, some of the concerns that folks have faced? You indicated that it's harder to get insurance and it's more costly. Are you talking about the cost of flood insurance? And are there other kinds of insurance that people are finding it harder to get?
I think mainly with flood insurance, I understand that sometimes the increased cost can annually increase. So sometimes people choose just not to get that type of insurance because it's just not, they're not able to afford it. And sometimes they feel like, well, if they just save the money, they can fix it themselves if something were to happen.
Commissioner, if I could
Please.
just add for a minute. One of the things that's going to be happening this year and next year is risk rating 2.0 for the flood insurance. And that is going to cause the premiums for some flood insurance policies to decrease. So that's something that we can, when we're doing our tour, as the commissioner referred to, maybe we can help educate people that there will be some decreases in policy premiums through the National Flood Insurance Program for both existing and new policyholders.
I think that would be very helpful.
Yeah, I think that's a really good point, Joy. Did anybody else from the MIA have any questions of Ms. Darcy or any other comments they'd like to make?
Commissioner, if you mind, as a producing agent, Jay Duke, Leonardtown, Maryland. Megan's and in both of yours observation that it is a combination of young farmers, older farmers with traditional farming, not knowing when they decide to maybe put a small maize or to make their own food on land or to provide paid for tractor rides, that maybe they've started something that's not covered on their current policies. There has also been a slowness. Insurance companies aren't known for being the most forward-thinking, quick-acting organizations out there. And so there are still traditional farm insurers that will limit these agritourism kind of exposures that they're willing to insure, causing some disruption that a farmer who maybe has had a policy with the company for 10, 15 years now suddenly has to go through the process of switching. So there is disruption there. And then I'll pass on with Joy. So risk rating 2.0 for new business, it's effective October 1, basically in effect now. It may, Megan, help some folks who did not previously have flood insurance, who maybe avoided it because they must have a survey done, an elevation certificate done, which required them to then pay a surveyor to do so. Under risk rating 2.0, they will no longer have to do that to get their policy. I don't know. We'll see what happens, Joy, whether or not we have many people who see a decreasing premium. I'm still a little reluctant to embrace that too fully, but it could happen. But I was surprised here just recently trying to get a rate for a dwelling that's never had flood insurance before. And I was able to get it priced without having to get an elevation certificate under the new rules.
That's great, Mr. Duke. That's very, very helpful information. I'm sorry, Joy, I think I cut you off.
But what I was going to say is, based on the data that FEMA has provided, Mr. Duke, there are supposed to be significant decreases in Maryland. Now, that's not the case for all the states, but what the data has showed, but the proof is in the pudding, is that Maryland will benefit. So I'll be interested to see in the spring.
Yeah. I mean, we know under 2.0, there are going to be winners and losers. But what we're hoping is that if at least, where Maryland is concerned, that as we move, the rating, that we will not be absorbing or subsidizing quite as much of other areas of the country that do have much more significant, issues than we do. So as Joy said, and as you've said, we'll see how that plays out. But very, very helpful information. I'm interested too. You talked about the fact that there are carriers that are very tight in their underwriting standards once you move from a more traditional agricultural farming operation into other activities, particularly the tourism component. And I know that you can't speak for companies, but I'm curious because you've been an agent for a long time. You're very experienced. You are here today also for the big I, is to try to, is it your sense that this is, that companies are reluctant to venture into this area because of economic concerns, or are you feeling that it's more a sense of we do what we've always done the way we've always done it, and that it's more a lack of creativity?
And this is in relation to agritourism?
Yeah, as Mr. Duke was saying that, and I would like to hear from both of you of what,
Okay.
like, sort of your sense of, as you're working with carriers, Jay, particularly, and you're trying to, work through and develop, get your clients coverage in different areas,
Support
is
the
what
carrier.
you're experiencing from the carriers in terms of their willingness and openness to look at other operations, where that's
It's
coming from.
difficult to establish a rate for something that you have been unable to collect statistics on for a number of years. So if you're going into a new venture, how many farms out there who now have started doing public tractor rides and pick your own pumpkins? So pick your own products has been around a while, but that hasn't been associated with the hay rides around a 30-acre farm. And so how do you get an insurance company or an actuary to create a rate for that? That's difficult. And to Megan, I mean, this agritourism has picked up speed in the last 10 years. I would say it's only the last 2 years that it's been much easier to insure these items. So
Yeah,
it's
because
coming
you
around.
have to look at national data, right? I mean,
Yes.
if you're opening up into a new area, just like a new insurer has to look at national data. Yeah.
And I apologize, Commissioner Moraine, Nancy Egan with American Property Casualty Insurance Association. Megan, we represent about 60% of the property casualty market, the insurance companies. I can go back to them and sort of do a questionnaire and ask them if they could provide us some feedback to our members on behalf of the MIA and get a sense about how they're addressing such things as food service, tractor rides, mazes, and pick your own exposures, and seeing if they're coming up with endorsements that can be added onto the policy for additional costs. I think that general liability exposure is envisioning that they're only doing agricultural production, as Jay Duke has mentioned, and I should say shout out to you. I remember you from my agent days, and but I can get a sense and maybe do a little questions, and if there's, and Robert, if you have some other questions you think I should send out to our members, I can find that out and get back to you with some more information. And Karen from our, who's also from my organization, is on the policy research side. So if we can put some questions together, we'll find out what the marketplace is doing right now, if that helps.
Nancy,
That would
no, I'm sorry, go ahead, Megan.
No, I was just going to say thank you very much, and we're happy to share the information that you find with our constituency.
Thank you.
Much appreciated, Nancy. Look, we don't want to push carriers to do anything that they're not of a mind to do. However, we're also always willing to be very supportive of carriers, particularly when they're really reaching to to meet unmet needs of Marylanders. So thanks for volunteering to do that. Really appreciate it. So any other questions from the MIA folks for Ms. Darcy? Thank you very much for your presentation. Obviously, really, really great things that you've brought up. And we'll look forward to seeing John so that he can fill us in as well on the Wheels of Wellness program. I am actually very interested in hearing about that. And if for some reason he's just unable to join us at all today, I would love for him to circle back and just chat with me and my folks about what's going on with that. But happy to do that offline if something's made it difficult for him to connect today.
Okay, wonderful. Thank you so much, Commissioner.
Oh, you are very welcome. Next, we have with us Stacy Cohen, who's the Executive Vice President for Health Services at Carefirst Blue Cross Blue Shield. Stacy, thank you for being with us today. Are you here? Yes. Yes. Hi. I had the gallery view, so.
You would think 18 months into the pandemic, we'd have the hang of the mute button, right?
Yeah.
Right. Thanks for having me today. I appreciate the opportunity to speak with you all. As the commissioner said, my name is Stacy Cohen. I lead health services at Carefirst Blue Cross Blue Shield. So you can think of that as a broad accountability for all of our clinical programs, network and provider relationships, and our philanthropic portfolio. A bit about me, because I think germane to the topic at hand, I actually grew up in rural healthcare. I am from rural Minnesota. I am a nurse. I trained in rural medicine. I practiced the first 20 years of my career in rural healthcare. And I have a perspective from both the provider and payer side of healthcare, well informed by the needs of rural communities, where care is often hampered by time, distance, technology, transportation, and if you're in northern Minnesota, weather. And so I think that this is an area that we spend a lot of time thinking about. How do we make sure we have an equitable environment for healthcare for all Marylanders? A little bit of a framing focus. When I think about network adequacy, I don't just think about network adequacy, I think about access to care, because that's the purpose of a network, is to provide access for care. And increasingly, access is defined by the people who need care, not just those of us who deliver care and pay for it. People, myself included, have changing needs and expectations around this as technology, as healthcare, as the specialization of medicine has evolved. How we define what access is changing, and what we consider to be accessible is changing as well. I, at times, say somewhat tongue-in-cheek, it shouldn't matter to me as a patient whether I'm communicating with my provider via face-to-face, telemedicine, telephone call, email, chat, SMS, carrier pigeon, smoke signals, whatever the communication pattern is. Frankly, that should not be defined by pay for click. And that is one of the challenges that we have today. We hear with some regularity about the need for more accessible modalities for accessing healthcare. We also hear equally as much about those modalities have to be affordable and that people can't afford healthcare today. So it's a bit of a delicate balancing act about how do we bring a broader range of services and supports and access to care in the ways in which people want to access it now at the time of day, day of week, modality of their choosing, and do that in a way that is equitable. We were thrilled to see the governor's commitment of state funding and ARPA funding to the expansion of broadband access. That actually is a barrier to health these days. Access to broadband is actually access to care. It's every bit as much as it's access to education. And so I think the more collectively as a state and as stakeholders in this ecosystem we can be advancing that, the more effectively people can be served. A little bit more context. I think that that the previous speaker, highlighted really important other issues such as transportation. I would add access to healthy foods. If food is health, right? That more and more health care and health can't be defined only by visits with a provider, because we all know, and there's a growing body of evidence to support that our health is about more than what happens in a transaction or in an encounter between a patient and a healthcare practitioner. And so we try to think about all those things as we are addressing access to care. But a bit about, true nuts and bolts and what people have historically thought of as network adequacy, defined by contracts with providers for services for a defined set of things and exchanged in a claim. A bit about Carefirst. So we have the largest network in the state with a demonstrated commitment to serving all parts of the state, including rural Maryland. For many, many years, we were the only payer that served the individual markets statewide. We have, demonstrated an ongoing commitment to the residents of Maryland and to making affordable, accessible healthcare access, because we believe that to be our mission. We have 96% of the known rural healthcare providers in our network already. We regularly comb even out of network claims to identify providers who are not participating with us, to recruit them into the network, to see how we can continue to add them. And we add about 10,000 new practitioners per year to our network. In the past 5 years, in response to a growing and recognized need, we have increased our behavioral health practitioners by over 30%. To the point that we now actually have so many solo practitioners in the network, it's at times really difficult to match supply with demand. And so when you think about the challenges, even for solo practitioner providers, they don't really have any infrastructure. So if I'm a therapist or a psychologist seeing a patient, even if it's via video or via telephone, and somebody else calls to make an appointment, and I don't have any infrastructure to schedule that, to set up that appointment at the time, and by the time I'm finished with my patient and call whoever was calling me back, they've moved on to somebody else. There's a disconnect between supply and demand today. I do ultimately think we probably are going to need more practitioners. We don't have any idea what the new demands and new needs of people that have been prompted by the pandemic, the needs for behavioral health services that, frankly, lots of times living in a heightened state of anticipation or anxiety, waiting for the next foot to drop. Like, we don't know, what increased and sustained increase in demand and need by patients is going to look like. We have to start with being able to match the capacity we already have in the system that's going unused. And so that's an area we're doing some work to figure out how we can more effectively do that. It's not just provider directories. It's not going, because lots of the capacity that we have that's going unused, those are people who are accepting new patients. They're in the provider directory as accepting new patients. But there's a bigger barrier there around technology, around infrastructure capacity, and around capabilities to match to the people who need them. When that's all, when that capacity is full, we are probably going to have to do more. One of the areas we think about both as a stakeholder in the state, but also as partners of the state, is to think about what does the workforce of the future look like? What are the sustained future demands going to be? And particularly for rural Maryland, what's it going to take to get people to be willing to move there, live there, and practice there? So there's a myriad of issues that become amplified when we're also trying to address places where there's already known healthcare professional shortages. We don't know what the demand is going to be on children in particular. I think we are all reading a lot, watching a lot, trying to pay attention to what is, frankly, what are the effects of the last 18 months going to be on our kids? And I don't think we know that yet, but it's something that we all need to be eyes wide open about. I would also say Carefirst has a strong commitment to primary care as the cornerstone for health. We have invested in, continue to deliberately grow and support primary care in many cases because that is the access to care in rural communities. And we believe that to be a holistic approach to health. We continue to evolve our decade-long patient-centered medical home program to best meet the needs of the people that it's intended to serve. That is both providers and patients. And it brings both business and clinical resources to primary care practices. As the state has rolled out the Maryland Primary Care Program, Carefirst was the first commercial payer to do multi-payer alignment with the state, and we continue to advance efforts to align more people into payment models that can help infuse capital for enhanced access upfront, right, instead of always on the back end to drive value and outcome-oriented constructs. We've also done things like the co-location of behavioral health practitioners in primary care. The last numbers that I saw that were published of that were really credible is about 70% of mental health care takes place in primary care. Because frankly, that's where lots and lots of people want their mental health. They want a holistic approach to care. So advancement of concepts and payment for things like the collaborative care model for co-location of behavioral health practitioners in primary care can enable that resource to be available where people are seeking care and in the ways that they're seeking care. I would also share that we have a commitment to innovation. We had a long-term commitment to telehealth long preceding the pandemic. I appreciated the previous speaker's comments about telehealth and the observation that prior to the pandemic, there was frankly little interest or uptake in it. Telehealth will not be the panacea for all of the things that plague healthcare in rural America and in rural Maryland. That can be a start. As interest picked up during the pandemic, we actually provided incremental support. We have always provided at no cost to our primary care providers a telehealth platform if they wanted to use that. We expanded that to a wide range of providers. But we also know that rural communities are challenged by spotty broadband. And so the platform is only going to be effective as long as you have broadband. So again, I would echo our thanks to the governor and to the investment that I believe is about $400 million to assure that every Marylander has broadband access by 2025. That will make a meaningful difference to the people at the other end of this. I would say the last perhaps comments I would make is I think there are other things we could collectively do as a state. This is not going to be solved, with a unidimensional approach or by a single part of the healthcare sector. We probably need to do more robust healthcare workforce analysis and see where else and what else we can do. When I began my nursing career, nurse practitioners were just getting started. Physician's assistants were just getting started. There was no such, formally recognized role as some of the community health workers. I think that we are limited only by our imagination about what healthcare of the future can and should be for the people who need care. We could consider, how are we going to at a state level, incent providers to set up shop in rural areas. Don't quite know what that looks like, but I think that it is going to take a level of creativity in the future that both in terms of the scope of practice, scope of licensure, the ways in which we regulate and think about who can do what and how do we support people in the ways that they want to be. So I hope that's a helpful background and some information, and I really appreciate the opportunity to engage in this important conversation.
No, thank you, Stacia. Lots of food for thought here, and some things that I think are worth follow-up conversations offline. One of the things that you highlighted that does concern me as you talk about supply and demand is that part of what we're seeing in the pandemic is movement of individuals to more rural areas. So you have a bit of a migration that's going on out of more urban areas into more rural areas. And that just highlights the concern about the adequacy of provider options. And that's not just about physicians and mental health professionals to go to. It's also, about hospital systems and, other kinds of care facilities, because to your point, you don't necessarily have those treatment options moving at the same rate as you have people, moving. So that is an area that is of concern to me, and that I guess we at some point need to have more conversation about. I don't think the Insurance Administration is going to solve that, but I think that it is an area of concern. I think the other thing that you talked about, and I guess I'd be interested again at some point in talking with not just Carefirst, but other providers about, how do we define wellness, and what really is, and I'm say this probably to the heart of David and Mary who are on the phone as well, but the sense of when is food, when is transportation, when are those really almost part of wellness programs that enable you to achieve health. And we have physicians that are writing prescriptions for food in some places to emphasize that connection, is access to healthy food and natural food, something that we need to begin to think about in a different way. And as we think about what carriers can cover and can provide. I guess the other point here, and happy to take any of your additional comments on this, but I think the other point here is I'm curious about, as you're talking about the infrastructure needs of solo practitioners, particularly in the mental health profession, because what I think that's probably one of the areas where we see the most, where you literally have one person shops, where there is no administrative assistant. There is really one person alone who's managing all elements of the practice. And whether that is something that Carefirst is developing solutions for those people that choose to be part of the network. Just if you have any comments on that. That's just pure nosiness on my part.
Sure. No, I think those are exactly the right question. So, in short, are we trying to think about how we could bring solutions to solo practitioners? Absolutely. Because it's not going to do us any good to have, we could have 50,000 providers in our network. If they can't connect to the people who actually need services for that lack of infrastructure, you're exactly right. And I think you highlighted a really important factor. Literally, they don't have somebody who's answering the phone. So if they're seeing a patient, or they're on the phone with a patient, or they're on a virtual visit, they don't have anybody to take that next patient and get them set up. And so absolutely, those are things we're thinking about. How is the best way to support some of those things? You also mentioned, though, healthcare capacity planning. And this actually is something that we've been both engaging in and thinking a lot about. If we were to have taken out the healthcare capacity plans from 5 years ago, or even 3 years ago, that looked at 1 year, 5 year, and 10-year projections about where care was going to be needed and of what kind, whether that was done by a carrier, whether that was done by a provider looking to make investments about where they were going to build new new clinics or resources or assets, or they were done at the state level, right? The pandemic would have frankly thrown a wrench in all of those. The out migration from the cities is spot on, and I think we're going to have to collectively dust off the capacity planning and take a new look at it. I don't think we know yet how long that out migration will persist, whether 2 years from now, people will stay in the rural communities or if they're going to migrate back into the cities. Frankly, if they stay, that also brings more jobs to support them, which also makes them more attractive markets for people to set up businesses in. So, it's a bit of a cycle there, that more people there means more resources there, means more jobs there, means more need for providers there. In that way, it's a bit of a virtuous cycle. And so that could naturally bring some more healthcare services to rural rural Maryland and frankly, rural America. I don't know if we know if it's going to stick yet. And so I think people who are making investments, providers who are looking to invest in clinics and services, they're investing for the long year, for the long term. And, they're going to want more assurances than, the next 15 or 18 months. And so I think it's going to be a delicate balancing act to make sure that we have our eye on where the populations are moving. Candidly, what age and needs the populations that move are. If we have an outmigration of the cities that mirrors what had been the outmigration from the rural communities to this, to the urban centers, honestly, in my lifetime, and what it left behind in lots of the rural communities was a much older population who had different healthcare needs. If the migration from the city back to rural America brings all the young families and young kids, it's going to change the complexion of even what's needed there. And so I think there's a lot of variables that go into good healthcare capacity planning. And I think you're right that we're going to have to sort of reshake the crystal ball about what is the healthcare needs of 5 years and 10 years out, and where are the demographic shifts going to be, and what kind of services and supports are going to be necessary for the people at the other end of those services.
Yeah, I think that your comment about also, what does the workplace look like? Because one of the things that everybody is experiencing, regardless of, what kind of employer you are, is a sense from many people that they would prefer not to return to the workplace on a full-time basis, and that, they value the ability to work remotely. And, we've seen that for years in Silicon Valley and with tech companies, et cetera, but you're really seeing it in a much broader way, now as people have become accustomed to, working differently. And so you're right. I mean, it's a crystal ball, right? But
right. Well, and in those respects, if you look at where broadband rolled out first, who had access to it first, who had it most reliably, and who had it at the highest speeds, it rolled out in the places that there was more demand in the workforce for being able to work remotely and move a lot of information across broadband, which frankly video requires. And so, we may see more of that more responsive capacity in the broadband network, just because that's where the people are who are using it and demanding it, right?
Well, very, 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 very helpful, very thoughtful. Does anybody else from the MIA team have any questions of Ms. Cohen? Well, thank you. I could talk about this all day long. So maybe perhaps again offline at some point with some follow-up with these things, but thank you for a very thoughtful and helpful presentation.
Thanks for having me. I appreciated it.
Absolutely. Thanks for being here. And then we have Mr. Colby Ferguson. So Mr. Ferguson, welcome. Mr. Ferguson is the Director of Government and Public Relations for the Maryland Farm Bureau, Inc. So very happy to hear from you today. I'm often concerned that we don't really hear a whole lot about, what are the insurance needs and concerns of, our agricultural communities, our farmers, et cetera. And we've got a taste of that from Ms. D'Arcy today, but I'm particularly interested in what you have to say to us.
Thank you very much. And obviously, had a very robust discussion already on the rural insurance needs and necessities. And so I'm not going to really go back over some of the same things that was already said, but just maybe highlight or add to a few things. One of the things, particularly in the agriculture community, if you think about in Maryland, probably roughly 99% of the farms in Maryland are family owned. We don't have the large corporate operations. It's pretty much all, you'll be in an LLC or something like that, or an S Corp, but primarily they're sole proprietors. And what we find is that if you don't have an off the farm job to provide the health insurance for the family, they're basically into the Maryland portal, healthcare portal, and as a sole proprietor. And so, it's a little different than if you come in as a small business and you're providing, and there's more options within the small business side. But when you're coming in as just a single family, the limitations on what's available, what insurance programs are available within that, or the options, makes it a little bit difficult for farmers. And so for farm families, and when it makes you almost feel like the same way you are as a farmer, when you have limitations on who can buy your commodities. You're pretty much dictated on what you're going to pay, and you really don't have ability to shop it much if you only have one or two options. And that's the way the healthcare coverage is within the portal. Is the last time I checked, there was literally only one healthcare provider. So I think
But
there
they
was
are rolling out. United Healthcare is now going to be in all of the counties. So there will be at least two companies in all of the counties. But I absolutely hear what you're saying about the fact that very few carriers have chosen to write, statewide, so that when you go onto the exchange, you don't really have a whole lot of options. So I do hear you.
Yep. And so, it's a different when you can go in, you can use a broker as a small business and shop at farmers, particularly those that are family farms, don't have that. So I think that can continue to expand and make sure we have a diversified option for families, because some are young families just starting new, so their healthcare coverage would be different than an older generation that maybe is more Medicare backed and having those options for secondary coverage. So just definitely some things to keep in thought. To switch from that, we had a lot of discussions on telehealth. Obviously, within the farming community, broadband is obviously a necessity, and making sure you have good access to high-speed internet. We have good cell phone access in most places, but when you're talking about FaceTime coverage and Zoom calls or whatnot with a doctor, obviously that bandwidth becomes very, very limited. And another thing to kind of remember, and I thought Megan brought up some good discussions with the phone calls versus just an actual face-to-face Zoom call, is there's roughly between 20 and 26% of the state does not have adequate broadband service, depending on what number you look at. But I think the thing that's more important to hear is that roughly 30% of those that don't have coverage don't want it. So they're a generation that is that kind of is maybe less tech savvy. Old dogs don't like to learn new tricks type mentality. And so you have a lot of individuals that they don't want to own a computer. They don't want that. So they're not really interested in the broadband service because they don't have anything. They're still using a flip phone or a home line, and they want to go to their doctor and see them in person or talk to them physically. So those options, or keeping some of those, extending those types of telehealth options, is something that we would definitely support past the sunset of 2023. Another thing, you guys really discussed the agritourism side. I think on the traditional farming, there is very adequate providers for farm insurance, whether it be nationwide, State Farm, all the different types. I believe that's very, very strong. But under the agritourism side, that is a little bit of a challenge. And where, as we dig into it, one of the things that we're very fortunate in Maryland to have is we are still a contributory negligence state versus a comparative negligence like they have in Virginia and Pennsylvania. So basically, if you have an agritourism operation and you've got signs posted say don't run in this area, and some kid's running around and runs into a piece and hits its head, breaks an arm, whatever, they contributed to that negligence, to that injury, and therefore under case law would actually be thrown out of court. And so now if it's I'm the farmer and I have negligence, blow a tire and turn over a wagon and somebody gets injured, then obviously I'm going to be held liable for that. But some of the things that we believe would be would be possible legislation to limit on punitive liability, or even look at some immunity from liability on agritourism sites as an option that would help relieve some of that cost. Basically, when we talk to insurance companies, they're like, it's limitless on what somebody can sue you for. And so if we had some sort of limitations on the punitive damage, that would obviously bring the price of insurance down for those agritourism sites. The last thing I would talk about, deer. They're everywhere. If you're in Region 2, which is basically anything east of Washington County, they're everywhere. And quite frankly, if you don't see a deer dead on the side of the road, you just aren't looking very hard. And so, or you don't travel much. And based on some of the estimated numbers that we get from places like State Farm, roughly 30 to 36,000 deer collisions a year in the state of Maryland. So we just through the hunting community, it's roughly 80 to 85,000 deer are harvested a year just in hunting. And we're killing about 30 to 36,000 with our cars. So when you're pushing 40 to almost 50% of the deer are killed with cars, that's a little rough or a little excessive. And so when you talk to the insurance companies, it's so predictable that they can write in into your premiums. They can that assessment. So obviously, controlling and managing the deer population in Maryland is well overdue. Not only an economic issue for farming, but it is truly a dangerous issue for automobile drivers. And it's a little unfortunate that we don't have additional groups supporting us on trying to get the state to manage the deer a little bit better. It's about a $60 million economic damage to farmers and roughly about $125 million economic impact on auto damages. So it's real numbers. It's not just something made up. So I'll stop there. I know we're limited on time and answer any questions you guys I might have brought up.
Well, that's very helpful. I appreciate that. And I may circle back with you, Nancy, with some of those figures, in terms of quantifying that. Obviously, that's not a direct issue for the Maryland Insurance Administration, but I still do hear the concerns that you're raising about the what those economic numbers are, and being able to elevate those to people who can look at them. The only other question I had for you had to do with crop insurance specifically. So, is that another area where, in terms of product take up for farmers, there's all the general business insurance, but in terms of whether it's through derivatives or whether it's through direct insurance, whether there is a robust market for farmers with regard to their output.
So within the traditional sector of agriculture, which would be in your dairy and then livestock, and then obviously your grains, such as corn, soybeans, wheat, barley, a lot of the traditional poultry, those are really well done as far as with federal crop insurance. And those, I would say, is a pretty well-oiled machine as long as we continue to maintain them within the federal farm bill each year or every 5 years. And so obviously we will continue to advocate for that. Where I see probably a deficiency would be in the small specialty crop side, the ones that are selling directly to consumers or growing specialty crops or selling specialty type. Those in a lot of cases don't have very good crop insurance. They fall under the NAP or the basically the non-certified crops, and they are very limited in the amount of amount that you can cover. The cost of the premiums to get that is limited, and so that's one area that we are going to pursue when the 2023 Farm Bill is pushed, is to try to improve and increase that NAP insurance. But as far as crop insurance as a whole, Maryland is very well versed. I mean, we had a very limiting insurance program under the previous to this last Farm Bill for dairy. We addressed that very aggressively and was basically the saving grace to our Maryland dairy farmers over the last 4 or 5 years as the milk prices have been low. And then we saw rising milk prices right before the pandemic. And then obviously the pandemic ruptured the prices again. And so the crop insurance was really the limiting piece that kept those farmers afloat as we've had volatile prices since about 2014.
That's great. Thank you for that updated information. I'll be interested in tracking, what it is that you're doing, not so much as a direct issue with Congress, but mostly through the NAIC, which obviously tracks, the federal farm bill. So be interested in continuing the conversation.
One thing that you guys brought up earlier that I thought is something that we're looking into is the healthy foods and the discussion of, a lot of people call them food deserts, a lot of urban sites where they're just lacking of a grocery store, lacking of, basically you've got a convenience store in the corner, which is not providing enough sources and options for healthy foods at a reasonable price. And so those are things that we definitely want to look more at, more options and opportunities for urban agricultures, getting more of those types of farmers markets and actually growing food in the sources or in the food deserts where they're needed, and trying to really shore up some of that haves and have-nots, problems that we see out there, particularly in the urban areas such as Baltimore City and inner parts of Prince George's County and things like that.
So you're talking about matching, being able to fill in?
Yeah, and provide options and opportunities, particularly for those that are on WIC and senior coupons, to redeem those more readily. A lot of times, people can be on those, but it's 2 bus rides to get to a viable grocery store to actually redeem those. So a lot of times they go unused, and the quality of food that a lot of our inner city families are eating is subpar, and it's just due to lack of options. And
Is it a transportation issue for the farmers? Is it a location issue?
For farmers, it's location and access. For the families that are in there, it's probably a lack of transportation. So it's trying to take the food to the people instead of the people to the food.
Yeah, I was just thinking about that, and like when you're obviously I'm not an expert in refrigeration or transportation of crops and all these various goods, but it was curious to me in terms of setup locations, whether that's part of the issue. Is if you were to come to a more urban area where folks have less opportunity to purchase things using those coupons, et cetera, is it because you need a place to land? And a farmer's market isn't necessarily, maybe there isn't one around, or that's not the best place to try to go, but you're looking for that place where you could set up.
Yeah. Well, and it's not just a farmer's market, but it's really just access to grocery stores. and then you get down to just the ability to know how to cook and the time to cook. A lot of people carry multiple jobs, and they have kids at home that come home from school, and they've got to kind of provide their own nourishment for dinner. And so it's a challenge when you get into certain parts of the state. I know you go into Park Heights, they've got a really good urban agriculture program there, and they're providing food boxes to families in that region. And it's a sustainable project and program that I would like to see replicated in other parts of the urban sector.
Yeah, I mean, I was thinking about, but you may not already know him, introducing you to Jeff Griffin.
Yeah.
Yeah, who's the executive director in the program that he runs. So
Mhm.
it sounds like you already have familiarity there.
Yeah, I think we've got examples of things that are successful. It's just sometimes their lack of funding and lack of just top down interest, to make these facilities or locations, whether it be vacant lots, whether it be locations within urban centers available for that access. So kind of has to become a priority.
Well, and this is a good conversation, frankly, to have on this call with insurers that are available, because one of the innovations that we've seen in so many of the Maryland carriers is whether it's investment in activities that will do things like make food available, but areas where rather than perceiving it as direct care, investment in areas or in businesses or groups that provide assistance and provide food sources, et cetera, which then drives and helps with better care and dealing with health inequities in certain areas, or in circumstances where there are more direct programs. More and more carriers are looking at solutions for delivering better, healthier care. So you may get a phone call after this.
Yeah, I mean, we've got certain counties that will actually stand up farmers markets adjacent to their locations where they hand out the WIC. So if they hand out WIC coupons on Thursdays once a month, then they'll stand up a farmers market right there for those at those health departments to have, if you're getting your bus ride to the health department, if you can kind of do a one-stop shop there, we believe that the redemption is much, much higher than hoping that they go somewhere that weekend or something like that. So to me, those anytime you can do a one-stop shopping, you see the redemption's much higher.
Well, thank you. A lot of really good points. I really appreciate that. Anybody from the MIA have any other questions or comments? Well, thank you, Mr. Ferguson. I really appreciate you joining us today. Our next presenter, I think, is Karen Collins. I know Nancy had to step away, but Ms. Collins is the Assistant Vice President of Personal Lines at the American Property and Casualty Insurance Association. So very happy that you were able to join us, and happy to take your comments.
Yeah, I will try to maybe touch on a couple of different areas. I think top of mind in the property insurance market, and you'll have to excuse me, I'm based in California, not on the East Coast, so I'm saying good morning from California. But I study the trends throughout all of the different states throughout the country, and we are seeing substantial pressure on the property market from a number of challenges. We, of course, have seen a record number of storms and wildfires, rain, flooding events. Unfortunately, Hurricane Ida that just came through and affected the southern part of the U.S. and then moved and dropped substantial amounts of rain throughout the Northeast as well, including, I think, in a lot of parts of Maryland. These storms, these events, the impacts from a warming climate, we are seeing more of those. And this is, of course, adding substantial pressure as more properties are having to be reconstructed at the same time. While there's also been a lot of unique facets from the pandemic, the COVID-19 pandemic, that has led to new housing expansion in rural areas, as you mentioned, where the demand moved from urban areas into rural. as well as just a lot of home reconstruction or home remodel projects as people have been at home. And so these have kind of combined into this growing demand or need for construction materials. And unfortunately, what we've seen in the past year is a drawdown of those inventories themselves. We have seen supply chain issues as overseas and the issues of the COVID-19 pandemic spreading, the Delta variant spreading. We've seen manufacturing shut down and not be able to replenish what has already been dwindled inventories. And so these are all combining to create new pressures and challenges that are certainly impacting the cost to reconstruct a home. And so as we look at what that cost to rebuild is, we have been closely working with our member companies and policyholders, consumers, to understand what is your current level of coverage? Where is your policy limits at currently? And do you need to make any adjustments should certain, unforeseen events occur? Many that maybe have walked into a Home Depot or a Lowe's or whatever's the local supply in your area looking for lumber earlier this year. We saw nationwide cost for lumber jump almost 400%, which was a huge headline for a number of months. Those have come down a little bit, but still well above what they were just in the last year, couple of years. We've seen similar increases for steel and plastics and shortages of even just trying to get appliances such as a new refrigerator or a dishwasher into a home. So understanding that these are very unique issues that the market is currently struggling through. What our biggest message has been to consumers, and this impacts those obviously in rural Maryland as well, is to revisit your policy coverage and really emphasize the need for mitigation. A couple of coverages that I might highlight for consumers to consider is in this time of demand surge, where there's many people trying to reconstruct properties at the same time, there are optional coverages that may actually increase your policy limits because of that demand surge. Often those are referred to as extended replacement cost coverage. Similarly, many states are implementing new building codes to provide, safer upgrades and whatever the issues are as new communities are built. And so if policyholders have maybe building or ordinance coverage in their policy, they may want to look at what that minimum is or if there's additional amounts they might want. Also, the length of time to rebuild is actually, we're seeing that stretching out as those shortages to get materials are becoming more challenging. And so while your home is being reconstructed, if you're unfortunately experiencing a loss, looking at your additional living expense coverage, what are the limits that you have available to pay for those additional costs to be out of your home? And what is the time frame also, if it's a 1-year limit or longer? So we are looking at these closely in the various states. It varies state by state, of course, but those are some of the common ones that we tend to highlight from a policy coverage review. Mitigation, of course, is a huge, huge message that we continue to promote, simply because we have the technology, the tools, the knowledge on how to make our homes more resilient to these events. In Maryland, rural Maryland, I know that there is the wind mitigation discount program that is available within the state, I think since 2009, where there are discounts available to policyholders that do put in those qualified mitigation actions for wind, such as your hurricane shutters or a secondary water barrier, reinforced roof coverings, and the list goes on. Flood is certainly a concern within Maryland, and certainly rural Maryland in particular, and there's a lot of mitigation techniques that can be done for a home to make that more resilient to flooding that might occur. There's dry flood proofing, where you can seal your home's exterior walls to protect it from flooding. There's wet proofing, which takes those uninhabitable parts of your home and makes that resistant to flood damage when the water is actually able to come through and enter during that flood. And there's also elevation that you can do. Of course, it's more intense of a mitigation option, but that is one that is very effective as well to lift that building to a higher level of foundation. These are really important in the context of, with the various impacts that we're seeing with a warming climate, we are seeing more flooding events. And so I was appreciative of those that highlighted the changes that are coming out from Risk Rating 2.0 on the National Flood Insurance Program. And this is, I think, really important to understand why mitigation is so important, because this change to the National Flood Insurance Program is probably the biggest change to that program since 1968. you will see new premium adjustments that are done. Some will go up, some will come down. But I think what's really important to understand with the changes that are going in is that they are moving to reflect an individual property's risk away from what used to be mainly based on what your floodplain characterization was. So with this program, they are looking to reflect more types of flood risk within those rates and using more appropriate actuarial techniques to help set those rates based on the unique individual risk of that property. So again, as we look at mitigation with flood, and that is such an issue within the rural area, there is more control that will now be available to consumers within Maryland to really adjust what those rates are, and to know that that is coming. This is a good time to take action. There's a lot of new programs or benefits being made available through federal programs also for mitigation through grant programs, including through FEMA, that I think consumers would be beneficial to explore those. Some are done at the individual level and some are done at a community level, but those are available. And so we want to highlight those and really underscore that opportunity for consumers. I think one of the items that was also mentioned that we wanted to share is just within the insurance industry, obviously there's a lot of reconstruction that is going on with natural disasters. And often when those natural disasters come through, it presents, unfortunately, opportunity for those that want to take advantage of consumers. Understanding what are the best practices should you have to deal with the recovery process after a loss. Unfortunately, there's the loss that suffered just from the storm damage, but many times you will see storm chasing contractors that may come through and often, unfortunately, may do shoddy work or might even disappear once they've got a check in hand. And so there's certain best practices that we also like to share with consumers. One would be to make sure that you're only dealing with licensed contractors, just to be cautious of those unsolicited door-to-door sales individuals, certainly after those large events like a hailstorm or a tornado, et cetera. Verifying, the license number and the expiration date, making sure they're insured and bonded. Asking for references is so important to know, did the work get completed? Was it on time? Was it within budget? And getting all of that information in writing. Know what your policy coverage is, ideally before a loss occurs, before a storm comes through. And then to get multiple estimates, certainly for those larger, costlier jobs. And just making sure you have a very clear contract. There's generally specific things that you want to see included in that contract, such as, is there a precise description and location of all the damage that's being claimed that they're going to repair for you? It should include an itemized estimate of those repair costs, such as the cost of the raw materials, your hourly labor rate, and the number of hours for each item on really a unit cost basis. And then if there's damaged areas that are not reflected in that and why those might not be included. We often encourage, our policyholders to make sure that they've had a claims adjuster come out before they sign those contracts, so that there's a discussion that can occur and make sure that there's a clear understanding from all parties. But unfortunately, there are those home repair scams that we caution of, and there's certain, red flags that you can use to maybe help spot some of those. A contractor that maybe is being very vague about the cost of the job, where they don't want to put anything in writing. Soliciting, where they're maybe saying, oh, we're doing a few jobs a couple doors down, we've got leftover material, so hey, we can give you this discounted rate or something along those lines. Any high pressure scare tactics, anything that, where they're maybe missing information, where they're not really a confirmed phone number or street address, a physical presence that you can just, confirm, is this a legitimate business? And then certainly the pressure to pay. That is one of the biggest things that we see a issue that can emerge, where they may ask you to waive your right to cancel a contract. There's regulations related to this. The Door-to-Door Sales Act allows you 5 business days to cancel a contract, 7 if you're age 65 and over. And a legitimate contractor will let you know about this. So if they're not, this is something you'd want to be questioning. And then separately, if they're pushing hard to do a cash payment or asking you to pay the job up front. Most contractors will generally accept payment in 3 phases. Often there's an initial advance, then you may make a second partial payment, and then that final payment really should be done after the work is complete. You've had a chance to review that and sign off that everything is agreeable. My understanding with Maryland is it actually may be against the law for a contractor to accept more than 1/3 in advance. So that's a protection for Maryland consumers, and those contractors should be mindful of that. So those are some of the concerns that we do see that tend to come up. Again, we've had so many widespread disasters. It's been really difficult, and the insurance industry, we want to be here to provide that coverage and to be available and assist in that recovery process. And so there's these tips that we share, but again, we want to help people avoid even being in this place. And so that mitigation message has been such a big one for the insurance industry and all of our members that we can't stress enough for. So let me pause there.
So Karen, thank you. It really helpful. Let me ask you, when you say we advise our policyholders, do you have a card, a brochure? How do you advise your policyholders? You gave us an incredible, bulleted list that you would want to see on any kind of consumer education piece of the things to look out for. And so I'm curious about, whether that actually exists in that sort of a format.
I think individual carriers will take different approaches on how they communicate this information. I know Maryland, your Consumer Protection Division, has a really great resource on the home repair scams. As far as a specific list, we have general mitigation practices that we share that's more at a national level. And I can certainly have Nancy relay, some of those with storm chaser and fraud that can occur after a storm. We do have some materials within the APCI organization that we make available through press releases into our member companies, and then they may rely on that or have variations of that they choose to pass along as well.
No, that's terrific, because I think that Maryland, the Hogan administration, and certainly Joy's folks, and the materials that people have come together to put together are very thorough and comprehensive, but they can always be better. So I'm always interested, and particularly from the standpoint of special investigation units of carriers that work with this day in and day out. Eric, who's on the phone with us today, obviously from our fraud unit, his group works with these issues all the time. And sometimes part of our frustration is that we can address the licensure issue. So we can look at the person who's kind of stepping into the role of the public adjuster without being licensed as a public adjuster and address that. But what is often maybe more of a challenge is the insurance fraud element of it. That's not licensing, but rather what you described as, the person who's lying about the scope of the work to be done, or who's using substandard materials and calling them something else. Because we necessarily rely on the SIUs to give us that kind of data, and we don't always get that. So, Eric, I don't know if you have anything else to add to that, but I know that's sometimes a frustration for your group.
Thank you. Yeah, we worked with the SIUs. We just recently had a meeting with the State's Attorney's Office and several SIUs, and it is frustrating. We get a lot of the roofing companies that show up, and they go up and inspect the roof, and they're actually doing the damage to the roofs themselves. The problem we run into is, unless it's being witnessed or filmed, a lot of times it's hard to prove who's doing that damage, and the state's attorneys won't take them unless we have some video proof or a way to tone it down to who exactly was on the roof. Like, a lot of the homeowners can't keep track of who might have been on their roof in past claims, or if they had anybody up there working before. So the state's attorneys in Maryland aren't normal. They don't normally take those types of cases unless we have video proof. And as you can imagine, that's hard to get unless you have someone, which we had recently, an adjuster across the street working on a roof who happened to see someone up on the roof pulling up shingles, and he videotaped them. So we do occasionally get those, which is nice.
Yeah, no, consumers really need to be aware of this potential fraud. it's unfortunately a cost that gets passed on to everybody that ultimately pays for that. And so we want to be diligent in identifying and reporting that. And fortunately, there's new tools and technology that are emerging within the industry that I know many of the claims departments of many companies are embracing. Certainly during the pandemic, there's been increased use of tools that allow safer social distancing using things like drone inspections and virtual tools. And drone inspections are fantastic as they've emerged because, perfect example, a roof inspection. Do we physically need someone to be on the roof to look at every aspect of damage, or can some of that be addressed through that electronic device that can then go above it and really zoom in and capture all of that in ways that maybe someone that's limited to a certain section of the roof safely can even access? But yes, no, the SIU teams are very critical within an insurance company, and they will do their diligence to try to identify and separate those. But we certainly need consumers to be mindful and report that as well, and not to be pulled into these scams.
Yes, absolutely.
Very, very helpful. I think the other issue that we'll follow up with you on, I think you provided a really nice list of policy coverage considerations. Particularly, as you've pointed out, the supply chain and, the lack of certain kinds of resources. You wait forever and a day to get anything that has a chip in it recently as well. So, on the auto side of things, you also have a really much longer period to replace car parts as well. So I think that one of the things where we can pull together, and Jay, you may have some thoughts about this too, because we'll get to you next, is a consumer alert around, given some of the disruptions, to have people be mindful, and an alert to our producers that this is a really good opportunity and a time to step into conversation with your clients and make sure that they have, that they've considered adjusting their coverage in order to accommodate some of the sort of just realistic economic concerns that exist in light of, the pandemic. So very, very helpful. Anybody else on the MIA team have any comments or questions for Karen?
I'll just highlight that with the supply chain issues, we've just recently published a couple of white papers on that. And I, through Nancy, just had those forwarded to, I believe it was Robert Barron for that. So your office should have a copy of that now.
Thank you for that, Karen. Yeah, you hit on everything that is front and center on our radar as far as storm claims is concerned. And we are seeing, when we follow loss data out of the NAIC, for example, on the auto side, the effect of the supply chain shortages that you're talking about on lengthening repair times, increased costs of settlement values. It's hard to even find a car if you have to replace a car these days. You're probably not going to get exactly what it is you want. So thank you for all of that.
Thank you. Next we have up Jay Duke. And Jay, we've had a chance to talk to you a little bit already today. I'm excited that you were able to join us. So happy to hear from you and your experiences, both in Leonardstown, and I guess you're speaking also for the Big I, so that's great as well. Welcome.
Oh, thank you for the chance to speak here. Yes, I am here as the legislative chairman for the Big I of Maryland, the oldest association of independent agents in the state. So thank you. I feel the folks that have spoke before me have covered well much of what I wanted to speak about. I'll kind of work backwards then from what Karen just said. On the street, when you're talking to a consumer, most likely personal lines homeowners who wants to know why their rates are going up, because the insurers are feeling the pressure of many more claims, many more storm events, and the need to raise their rates. And I'm trying to speak to them that maybe their coverage is inadequate And so we have a very conflicting situation going on where the consumer wants to reduce what they're paying. And I'm trying to explain they need more coverage, which means they're going to have to pay more. So there's not a real easy answer to that. Traditionally, again, what's happened, I can remember 20 years ago when guaranteed replacement first got introduced on homeowners policies, and nearly every insurer out there was saying that let's put this new thing on your policy and we will guarantee we'll pay up to 100% more than what you're showing on your list for coverage. Didn't take long for the insurers to realize that they were giving away a lot for very little money. And so then that guaranteed replacement now became a set price for only 25% more, another for 50%. And there are a couple of carriers that still offer 100% guaranteed replacement, but those are very few. Most are sitting at the 25% or 50%. And the easiest fix that I have that I'm doing is trying to ask customers to spend just a little bit of money to raise it from 25% guarantee to 50%. That seems to be my real life compromise that I'm finding that works. Colby from the Farm Bureau, I'm going to back up, then he was the next one who spoke, brought up a number of really good points. I just want to second what he offered. Thank you, Colby. Broadband expansion. A few people have talked about the broadband expansion. It's one thing for someone to provide grant money for the local cable or phone line to bring internet to it. But if that household can't afford to purchase a little iPad or a new smartphone or a computer, what good is the expense of bringing broadband to that house? And that's not even the idea if they even want it. So there's still a lot to finish that portion of expanding broadband into the rural, low-income areas of the state. It's the first step has gone on. And even then last year, what I found was the first step started when schools weren't in session. So even the idea of getting the word out that this was available was difficult because the natural dissemination would have occurred from the schools. So that slowed that down. Nutrition has been touched on. I've always realized that it's more expensive to eat healthy than it is to eat unhealthy. And that is a problem in the rural areas still. For some places where I am in Southern Maryland, where we have an Amish community, during growing season, it's easy because there are all kinds of fresh food markets there. Again, I get back to even Megan, who started off with the Rural Coalition. She touched on one thing, and Carefirst mentioned it. Two things from that is St. Mary's County is one of the counties that has no Medicare Advantage plans available, none. And when open season starts, I still have a pretty healthy Medicare supplement business. I get phone calls. What's this about, Jay? Tell me what this is about. And I have to start by saying, well, it doesn't work in St. Mary's County. What do you mean it doesn't work in St. Mary's County? So maybe that will end soon. Carefirst has introduced a Medicare Advantage plan in the state of Maryland to a lot of fanfare, but it is in only 9 counties of our 26 jurisdictions. So they have a long ways to go yet to really fill that void, especially in the rural. So the 9 counties where they are in the more populated central portions of Maryland. Adequacy. You mentioned, Commissioner, that United Healthcare will now be in all counties on the exchange. And that's great news, because for a while, as in St. Mary's, the only carrier we had was Carefirst. But I think it is extremely misleading that United Healthcare is there with one of their smallest network of doctors anywhere in the state. And so many people come in thinking that, gee, this is United Healthcare, without looking first, even if I try to explain to them, do this. The network is extremely small compared to what they may have found if they were previously in a group plan with United Healthcare. Hopefully that will grow. Hopefully that will change. But I don't think there's enough focus on that difference with United Healthcare. We talked about adequacy again. 5 years ago, there was one practicing psychiatrist in all of St. Mary's in Calvert County. Now, in that 5 year since, we now have 4. And we're not as rural in Southern Maryland as Western Maryland or some parts of the Eastern Shore. And I would think they're facing the same thing. It's one thing for the policy to cover mental health, but if you can't access that mental health provider, that doesn't do much. Back to the homeowners. Again, I'll go back 20 years ago when a home that was 10 miles from the fire department, I really had no problem finding coverage for them. That has dwindled. All of the homeowners companies want that home in the new development with fire hydrants and newer homes. The number of carriers that will do a home in what's protection class 10, meaning more than 5 miles from a fire department, has dwindled. Some carriers are even sub-routing that so that maybe they'll only go to 7 miles and then they stop. And so now there are even fewer carriers that will go to that between 7 and 10 miles.
What are you doing in those instances? I mean, are you finding that you're using different coverage forms, that you're doing more dwelling coverage, or what are your solutions?
Well, I have one company. I mean, my solution is really, I'll say 2 companies. If I, and then, now, I hate to say this as an independent agent, but sometimes I'll say, maybe you need to make some other phone calls to try. I'm a small independent agent, so the number of companies that I have access to is less than others. But still, I've got enough handle in the marketplace to know what was easy once before has become a little bit more difficult. I'm not going to mention, I shouldn't mention names actually now, but I mean, there's some well-known carriers that maybe still operate within that area. But when you look at the rate they charge, they're clearly sending a message that, oh yes, we'll offer you a policy because we do your particular category of occupation, but this is our premium. So there's sort of a hidden way of making purchasing a home 7 to 12 miles from a fire department more difficult. I think I've come close to exhausting my little bit of list there. I've already spoke a little bit to the new agritourism problem. And I think Nancy and maybe Karen spoke to it, and even Colby, that the traditional farm, there is not a problem finding insurance for them. That's easy. It's when they start to change. Just as an example, a recent little case, 10 acres. Gee, we would like to start to do some winemaking. So let's plant some vines. No problem. You can add a little, you can even for a homeowners add a small farm endorsement to that kind of policy. Well, gee, now we've done this. Let's get some equipment. Let's make some of that wine in our basement. All right, so now let's bottle some wine and let's sell it in the stand where we were selling our vegetables at the edge of our property. Now suddenly they're selling wine from there, And if somebody gets them, they have to go to the state of Maryland. They have to get the specific class for on-site winemaking and sale. It's just about as difficult to go through the regulatory process as it is to get that insurance company to let you sell that alcohol-based product from your property. Now, there are, again, in the last 5 years, a growing number of insurers that will do that. But now maybe they want to do their own tasting room on their property. Now you're letting consumers come onto your property. And now let's give them tours so that they can walk through the growing sessions. So I think you can see as I'm doing this, the growing risk exposure that the insurance companies find. It can be done, but it isn't as easy as a traditional crop or cattle operation.
Well, and I think the other piece of this is that, Jay, not everybody has you that's walking, with them during this journey and helping them to understand at each trigger point where they're going to need to adjust their coverage, right?
Mhm.
So you have, the folks that, have knocked together a stand at the edge of their property, as you say, and as they evolve, they're not necessarily, reaching out to their agent saying, hey, what's my coverage here? And, because most of the time it's going to be okay until it's not okay. And then it's devastating.
Yes.
Well, very, very helpful, particularly with regard to the availability of coverage when, distance from, the firehouse or other, water resources for fire. Did anybody else on the MIA team have any questions for Mr. Duke? Well, thank you for your time today. I really appreciate the fact that you were able to join and how much you've added to this discussion. Thank you very, very much.
So Commissioner, I'm just looking at the chat. I see there is a question. If it says, what's the main reason why no Medicare Advantage plans in St. Mary's? I think it's an economic thing from the insurer's point of view. The way the insurers are able to make money from the government reimbursing them for this cost, they calculate that there aren't enough folks that will purchase the policy to make money. And so in St. Mary's, Washington, Allegheny County, there just aren't enough people that are going to purchase the policy. So the insurance companies make money. The government says, we're going to give you X amount of dollars. It's somewhere between $600 or $700 per person. If you can manage to insure them for less than that, you can keep the difference for your profit. The laws of large numbers say that you need to insure a large number of people. Otherwise, one or two claims can quickly make that endeavor unprofitable. MedStar tried it I guess almost 5 years ago now. They lasted 3 years and then they went out.
Yeah, I mean, the issues, and fortunately, the one thing that we can do as the regulator is get really detailed optics into what carriers' business plans are. But there are lots of complicated issues, and some of them have to do with networks as well. So I think that it is more Medicare Advantage plans is something that we all want to see. Maryland is a really hard state for Medicare Advantage to begin with because of some of the unique features of pricing, particularly for hospital facility care in Maryland. But they're working through that. So, continuously more to come on that.
Okay, thank you.
Thank you very much.
I'm going to be like Nancy and say that I have to go for a 3 o'clock appointment. Thank you for the opportunity.
Absolutely, and thank you for spending time with us today.
Bye.
I think that we may have had one additional speaker, Andrea Kasich from the Office of Congressman David Trone, but I'm not sure I see you.
Yeah, so she had to drop off.
Oh, I apologize. Okay, I didn't realize that she had a time limitation. Is there anybody who has joined us online who would like to be heard today? Okay, I'm not seeing anyone. Craig, I don't know if you were seeing anybody.
I am not.
Well, I want to thank everyone who participated today. This was a really rich session with lots of information, and I think lots of takeaways, particularly with regard to consumer education and alerts, and maybe a little bit more deep dive into understanding, some of the questions that we've had, some of the things that the carriers have pointed out in particular. So very, very grateful for everybody's participation. And unless anybody else has any comments, we'll wrap this one up. Anybody from the MIA that has any comments? All right, well, thank you very, very much. As indicated, this presentation will be uploaded to our website and available to folks. Thank you, Megan, very much. Take care, everybody. Have a great day. Bye.